Well, good evening. Thanks for joining me this evening, a late night chart session, and taking a look at a few charts I've found to be fascinating, to be quite honest. Let's start with the West Texas Intermediate crude oil chart, and what we can see from the crude oil chart is we had a peak in March 7th, which was right after, a week after Putin declared war in Ukraine, and then since then we had a secondary peak that peaked right here on June 14th. And June 14th, if you recall, that's when the interest rate markets peaked. So I don't think that's a coincidence. Too many markets are peaking at the same time. And so, and we can see today, if you take a look at today's action, um, goodness gracious, we were down 4.8% today. That was a big move lower. And I don't think there's much, there seems to be quite a bit of liquidation going on. Um, it also makes me wonder, I just got to tell you what's on my mind. I don't have any evidence for it or proof or anything like that, but it does make me wonder what's happening in China. China's a major buyer of oil, and they're going through the mortgage crisis right now, and it does make you wonder how bad the Chinese economy is unwinding at this point, how quickly it's unwinding. Anyway, just a thought. I don't really have uh, anything I'm going to develop on that thought for this video, but we are putting something together for later on, either this week or early next week. Anyway, let's move on to the next chart. Next chart is copper. And again, you take a look at what happened in June in copper, and it's fallen off a ledge. Now you got a little bit of a bounce, but it looks like that bounce might be over. You see a little bit of red today coming from the copper chart. So big moves lower in copper. And then let's look over at lumber real quick. Again, lumber. Let's center that so we can see it better. There we go. Taking a look at lumber. Um, Again, I mean, same story. If you looked at these charts, there's no way you couldn't, that you could say that the economy's doing well because the charts don't lie. And let's move on to the 10-year. Now, I did do some interesting work on the 10-year, so I put together. Let's move to the 10-year. This is a retracement level, so we have two different ways of looking at this pullback. One through a Fibonacci retracement going back to the lows of August 2020, and then the second was with our trend lines that we were looking at. And they don't actually tell the same story. The story is a little bit different. But you can see here, this is the Fibonacci retracement levels, and that would indicate some sort of support coming in at around 2.38% on the 10-year. So about 20 to 22 basis points lower would give us some sort of support in the Fibonacci for a 38% Fibonacci retracement. When you add up all the evidence, I think ultimately that would probably be a good spot for this market to pause. I don't think ultimately it's going to be the entire pullback. And I do think this is going to be seen as a pullback when all is said and done, but a major pullback. And that 61.8% level, which is around 168, is a very juicy looking pullback zone, a deep pullback within an overall rising rate environment. So we'll see what happens. But that's that's the beauty of time. It tells all. So, but I do think let's move on to the trend lines, and I'll tell you why. I think we have broken another trend line here. Closed today at 260 and 2.60, 2.61%. Excuse me. And that does call for that. That's why I think we're going to be initially coming down to to the 38% retracement level, maybe even lower, because you can see this next trend line that comes below comes in at about 2.1%. So you know, just kind of adding together the 2.1% level with this trend line. Let's switch back over here looking at the Fibonacci retracements. That would take you to a ballpark. You know, we're looking at about a 50% retracement level. That would sort of sync up the two approaches. And I think that's probably a pretty good number for right now. Ultimately, I kind of do think we're going to get a 618% retracement, full 618, but maybe not. Anyway, that 2% level, give or take a little bit, those are where the two, you know, the trend line study and the retracement levels merge together and converge together. So that's a decent area to be looking for some sort of bottom in rates ultimately. And that's probably, if I had to guess, that is probably going to happen sometime in October. And I have a specific reason for October, but it may be sooner, maybe September, but I do think that's where we're going to be headed. So that's about all I got right now for tonight. It's time for bed. I'm looking at the just to give you a quick on the 2-year, close at 2.84%, 2.85%, and it's basically ignoring the Federal Reserve at this point and trading on its own, which is pretty remarkable that the 2-year would do this. I've harped on this on previous videos, but that's what's happening. You know, the markets don't lie. They're the ultimate truth teller, so can't ignore them. Anyways, that's about it for tonight. I thank you for joining me. We will definitely have more tomorrow when hopefully I'll make a little more sense than I do tonight. But anyway, thank you for joining me. Have a great evening. Take care.